The crypto market is in utter collapse mode. A founder just lost 94% of his net worth. They're like, I want to redeem. Okay, well, what happens? Gemini and CryptoFi say, hey, look, we're in a crisis right now. No redemptions. Literally no redemptions. They could do that. It's happened before.
Meet Kevin is a real estate entrepreneur and financial analyst with a YouTube channel with over 1.85 million subscribers. In this video, he expertly exposes the FTX collapse and how CZ is the only man who can save the crypto market from complete collapse. But is he trustworthy? Watch this video to find out.
So, what happened today? Well, the first thing that happened is we found out that FTX is basically going kaput, basically going bankrupt. And their FTX token is now down over 70% on the day. The FTX token is a ticker symbol FTT. When you go to CoinMarketCap, you can see it's down 75.3% at the time of this recording, down to $5.46. Unfortunately, FTX needed a bailout, and that's where this person, CZ, comes in. That's to catch you up to speed, where CZ comes out and says, this afternoon, FTX asked for our help. There is a significant liquidity crunch. To protect users, we signed a non-buying letter of intent, intending to fully acquire FTX.com and helping cover the liquidity crunch. We will be conducting a full due diligence in the coming days. Things to know about that. First, FTX is the international branch. However, that international fear that's happening at FTX, which is going to lead more international FTX users to demand withdrawals, could end up spreading to the FTX US version. Even though technically they're separate, I think a lot of customers at the FTX US version are going to think, uh-oh, I better get my money out. And unfortunately, when a lot of people get fearful and take their money out, what ends up happening? Well, you end up creating exactly what companies try to avoid, a bank run, essentially. But because there's no audit of these companies, there's no Federal Reserve, FDIC, SEC, FINRA, none of that actually auditing these companies, we don't know if they have sufficient liquidity to actually cover the withdrawals that are being demanded of them. Some rumors suggest that FTX is seeing withdrawal requests of anywhere between $1 to $3 billion in just the last week. And unless they have all that cash available, unfortunately, they've got to go figure out where to get cash from somewhere else. The CEO of Coinbase has the following to say. First off, I have a lot of sympathy for everyone involved in the current situation with FTX. It's stressful anytime there is a potential for customer loss. Yeah, customer loss is the most important thing you want to avoid because that's what leads to bankruptcy. Remember when Voyager Digital started having liquidity issues and they started limiting withdrawals? That was a big red flag to get your money out of Voyager because it ended up leading to their complete collapse and bankruptcy. The only thing people were able to even have a claim of or on in the bankruptcy proceedings for Voyager Digital was cash. And I'm not talking about stable coins like USDC. I'm talking about straight up US dollars. So if you didn't move your coins to cash at these centralized exchanges, your claims in bankruptcy court were basically eradicated. That's because there is no lender of last resort to bail out these sort of companies like the Federal Reserve. Brian Armstrong says, Coinbase has no material exposure to FTX or FTT and no exposure to Alameda. So FTX is obviously the company, FTT is the FTX token, and Alameda is the sort of holding company that Mr. Sam Bankman-Fried owns. Mr. Brian Armstrong goes on to say that, I think it's important to reinforce what differentiates Coinbase in a moment like this. This event appears to be the result of risky business practices, including conflicts of interest between deeply intertwined entities and misuse of customer funds, lending user assets. Now, this is really interesting. This is a CEO who suggests it is a misuse of customer funds to potentially be lending user assets. But wait a minute. Coinbase applied to allow lending, but they got shut down by the SEC. So I feel like this is kind of kicking somebody for something you would have been doing anyway. And now you're alluding to this being risky. I mean, obviously risk management was an issue, otherwise they wouldn't be potentially going bankrupt here. but kind of interesting. Do keep in mind this sort of lending issue, all having to do with stablecoins, or a lot of it having to do with stablecoins, is an issue that we've talked about in this channel as well. In fact, back in March of 2021, I explained how this whole lending stuff just collapses. In fact, here's the clip. We think, hey, it's pegged to the dollar. It's pegged to the dollar one to one. And if it's pegged to the dollar 1 to 1, it's kind of like having cash, except it's kind of like a high yield savings account. But that's the problem. It's not. It's a loan. If they made you sign a document saying you agree to lend this and you could lose all of it, people probably would be less inclined to do this. But that's all in the fine print. They just say, hey, sign up and earn interest on your cryptocurrency. It sounds so wonderful. They don't make it clear that this is actually a loan. Now, that doesn't become a problem because right now, your GUSD doesn't fluctuate in value because it's pegged to the dollar and the markets are working normally. Prices are going up. You got nothing to worry about because as prices go up, there usually isn't stress in the markets, right? So when does this become a problem? Well, let's say Sally says, you know what, I'm gonna get some margin. I'm gonna buy Bitcoin for $100. I'm gonna get $25 of margin from Voyager here, and I'm gonna have $125 invested in Bitcoin. Now, let's say Bitcoin goes from 55K to 5K. That's a big drop. It's about 91%, right? Well, this is gonna go down 90% to about $12.50. What happens now? Well, now Sally gets wiped out. Sally got destroyed. And this could be a flash crash. This could be a day. Sally instantly gets destroyed because you have smart contracts that instantly take her money away, give it to Voyager. The problem is Voyager is left with an asset that's worth a whole lot less than what they thought it would ever be worth. So now they only have $12.50. They just lost money. When a company or an institutional investor loses money, and this happens at scale amongst hundreds or thousands of different client accounts, because we have no idea how many people are on margin. We don't get that kind of transparency from the system. We don't know. We don't know how often this GUSD is lent out over and over again. We have no idea. Let's say Voyager goes bankrupt. Okay, Voyager goes bankrupt because they're like, wow, we just had all these margin losses. Well, CryptoFi is probably going to have some issues as well, but I'll tell you the first thing that's going to happen. Kevin and Michael are going to be like, oh crap, please let me have my GUSD back. And all of a sudden, we're going to see a lot of people instantly demand redemptions. They're going to want, yo, turn my GUSD into dollars right now. The market's crashing. I'm freaking out. Okay, now, and I know some of you are gonna think, Kevin, come on, the same stuff happens in fractional reserve banking. Hold that thought, okay? I'm gonna put a little note down here, fractional reserve banking. We're gonna talk about fractional reserve banking. hold that thought, because there's a massive difference. Quite a few actual massive differences here. So what happens now? Now you've got two people who think they have $100 of GUSD in the bank. They're like, I wanna redeem. Okay, well, what happens? Gemini and CryptoFi say, hey, look, we're in a crisis right now, no redemptions. Literally no redemptions. They could do that. It's happened before. Look at Bitfinex. Bitfinex, a Chinese company, uses Tether as their stablecoin, and in October of 2018, they stopped allowing deposits, and so nobody was able to convert US dollars or Chinese dollars or whatever, or euros, into Tether, and the one-to-one peg of the Tether collapsed. It went down as low as 85 cents to $1, and there was no market crash. Bitcoin was stable around $6,000 when that happened. No crash, no collapse, and Tether loses 15%. Boom, like that. But wait a minute, it's pegged to the dollar. Okay, you think Kevin and Michael are gonna be able to go to the Fed and go, yo, I demand my USD? No, Fed's gonna laugh you. They're gonna laugh you out of the bank. Be like, get out of here. We did not bestow our trust on the GUSD. You tried to inherit trust of the USD. You tried to inherit the sovereign banking, the backing of the full faith and credit of the United States via a stablecoin, but it doesn't work that way. You get institutional bankruptcies. The value of those underlying coins, which are corporate controlled. This is not government controlled, they're corporate controlled. USDC is a consortium. They're private companies that control USDC. Gemini, private company that controls the Gemini coin. So back to the CEO of Coinbase again. Coinbase has always strived to be the most trusted player in the space, and we don't engage in this type of risky activity. Yeah, again, because you can't. You wanted to, but you can't. We don't do anything with our customers' funds unless directed to do so by the customer. We hold all assets dollar for dollar, and users can withdraw their money at any time. And that's fine, that may be true, but that doesn't mean that disruptions and dislocations in other parts of the crypto market couldn't destroy the valuation of certain currencies that you may be having at Coinbase, right? We are incorporated in the US. This is true. They're publicly listed in the US. And they say that's because we believe transparency and trust are important. So every investor and customer can see our public audited financials, which show how we hold customer funds. We never issued an exchange token. I think it's worth just intercepting here and saying, just because you're public doesn't mean you're not shady, you're gonna go bankrupt. So what do we know about Binance and CZ? And is it possible that CZ is a shady character? Well, take a look at this piece. What I'd like to show you are some of the highlights from this. Take a look at this. First, they suggest that Binance remains the biggest company in crypto by a mile, processing more transactions than all of the next 4 exchanges combined. That's not necessarily a good thing though, because Binance is a company that's the target of investigations by almost every financial regulator that exists. The Department of Justice, Commodity Future and Trading Commission, the IRS, the SEC, you name it. They're all looking in to Binance. And there's a reason for that. Because see, Binance is technically owned by Binance Holdings, which is a Cayman Islands firm, which is usually where companies go to kind of skirt disclosure and lawsuits. In fact, we technically don't really know who owns Binance Holdings or what their motivations are. Now, we know that CZ is the owner of Binance Capital Management, which is registered in the British Virgin Islands. Now, the problem with that is it makes suing these companies really hard when people sign up for an account and then run into problems. So, some people say CZ just has all the control, that he's the one guy in charge, which is really interesting because he refuses to show up in the United States because he's fearful of getting arrested in the US. Even though he says he doesn't think he's gonna get arrested, there has been an acknowledgement that he might get arrested if he comes to the US. And so when he speaks at conferences in the United States, he does so via Zoom. CZ himself is based out of Dubai, which Dubai is one of those places that people tend to go when they're trying to stay away from regulation in other countries and potentially avoid paying taxes on the money they're making. Now, we know that Binance got kicked out of the United Kingdom. On top of that, Binance sued Forbes when Forbes did this whole expose on how Binance was setting up bait and switch strategies for their customers. And then Binance eventually dropped that lawsuit. You would think if, Forbes messed up here, they wouldn't drop the lawsuit. He tweeted this "Stay Seifu" hashtag, which is a reference to their secure asset fund for users. And on their Binance website, they say that the secure asset fund was valued at $1 billion based on pricing on January 29th, 2022. So they're trying to say like, hey, we have this emergency insurance fund set up that was established in 2018 to protect users' funds. And look, we've got $1 billion over here. Well, no, you don't, because unfortunately, you park this stuff into things like the Binance token, and the Binance token, that's down like 7% today. 7.3% today. The Binance token's falling. So basically, the more that falls, the less money you actually have in the insurance fund. So this is kind of like saying, hey, we have an insurance fund so that basically if crypto tanks, you could get your money out. But wait a minute, that insurance fund is funded by Binance Coin, and if Binance Coin tanks, then there's less insurance to protect people in case the Binance Coin tanks. There's a complete disaster. It's like investing. It's almost like a Tether on steroids over here. Whatever. I think you get the point. These are the actual wallets, which don't actually show $1 billion anymore. What they show now is about $331 million, plus the second account shows, let's see here, I want to say it was about $150 million. Yeah, here it is. This is the second account. This shows about $144 million available. So really, you've got maybe $480 million in this insurance fund. That's less than half of what you said it was in January and what you're kind of advertising it as. So even Seifu isn't even really safe.
Check out this eye-popping video where Peter Schiff predicts the future of the markets and reveals the #1 asset to buy during a recession to get rich.